What is going on, traders? Welcome back to the Traveling Trader. Now, unless you've been hiding under a rock, you know that we are in the middle of a potential stock market correction. However, if you want to check out my analysis on whether I think we're heading towards bear market territory or not, check the video here. Otherwise, the short version is I don't think we're heading towards a bear market, and I think we do have some catalysts upcoming. One of them being the $1.9 trillion stimulus package, and we are one step closer to getting that. So in this video, I will be talking about the top 5 stocks that I think will benefit from an economic stimulus. Now, obviously, there aren't only 5 stocks. There are plenty of stocks, and this video will go on forever if I include every single one that I think is going to benefit, but we can speak in generalities and talk about some of the industries as well as the stocks that I think will benefit from a $1.9 trillion stimulus. And if you're wondering where I am, I'm in Palm Springs enjoying some R&R with friends and family, but that's not what you came here for, and that's definitely not the important part of the video. So without further ado, let's get right into it. All right, guys, back at the desk. Just a couple of things I wanted to point out to you before we actually get into the stocks. There was a research paper done by Deutsche Bank, and in this research paper, they uncovered that young millennials, those aged 25 to 34, plan to put 50% of their anticipated payments from Uncle Sam into the stock market. And for Gen Zs, those who are aged 18 to 24, plan to put 40% of that money in the stock market. So there are two main reasons why I'm highlighting this. The first one is obvious. Obviously, more money pouring into the stock market means that equities will likely inch higher. And the other reason I'm highlighting this is that, as we saw from the first stimulus bill, not everybody needs the money in the same degree. A lot of that first wave of stimulus money actually did make it into the stock market, and a huge percentage of that was also spent on the retail sector, which I guess it's part of the reason why you do a stimulus anyway, to try to boost the economy, give people extra money that they will then pour into the economy. But if a huge percentage of the population is actually not spending it on necessities, then that means that the economy is likely in a better shape than thought. All right, and the second major thing that I wanted to talk about is inflation. So as we're seeing with the bond yields rising up, that is due to the perceived rise in inflation. So inflation actually hasn't risen yet, but the expectation that inflation will rise. And that leads investors to act in a certain way where bond rates then start to go up. Now, moreover, in order to curb inflation, so if we have $1.9 trillion in stimulus coming, in order to curb that inflation, the Fed might need to raise interest rates. So as of now, the Fed hasn't done anything. So the bond rates are rising because of how investors are transacting with regards to bonds in the bond market. However, the Fed themselves have not raised the interest rates yet, but they will likely need to raise the interest rates at some point within the next 1 to 2 years. So there could be this battle going on between stimulus coming in and likely boosting the economy, as well as boosting equity prices, and the potential for the Fed to raise rates in order to curb inflation, which will then hurt equities. Now, we've had situations in the past where the stock market rises even though we do get a rate hike. However, the initial effect of a rate hike will have an immediate negative response, most likely on the stock market, and then the stock market can then potentially level out and continue to rise then. So just because we have rising rates doesn't mean that the stock market is going to go down that whole time. All right, well, what stocks am I bullish on if we do get stimulus passed? Well, in the market update video where I discussed whether I think we're going to be in a bear market or not, newsflash, no, in my view, we're not. I think that it is going to be a standard correction. Obviously, I could be wrong. But in that video, I was talking about a rotation. So there is a rotation happening where investors are rotating out of growth stocks. That's why you see the NASDAQ tanking, and the big names, the big FANG names, right, like Apple, Amazon, etc., are starting to wane. However, they've obviously had astronomical growth even during the pandemic. But we now want to rotate out of some of those stocks into stocks that will benefit from not only a recovery, but also stimulus. And one of those sectors is the airline sector. This is not a surprise. So a lot of that money coming from the stimulus, we don't know the exact details yet, but a lot of it is going to go most likely into the airline industry. Now, lucky for you, there's actually an easy ETF to invest if you don't want to pick and choose which airlines you want to invest in. If you want to invest in Spirit Airlines or Southwest or American Airlines, you can buy the JETS ETF. The ticker symbol is JETS. Now, there is about 20% upside until we get back to the pre-COVID levels, which we will. It's just a matter of time, obviously. Is it going to happen this year? Is it going to happen next year? Who knows? These are all long-term plays, by the way. Do not think of this as a swing trade. So, you know, if you happen to enter one of these, obviously you're entering at your own risk and your own decision. But if you happen to enter one of these, you know, you should not monitor this on a day-to-day basis and a week later say, oh my God, this is not mooning. You know, what's wrong with this stock? These are all long-term plays. So Jets ETF has about 20% upside just to get back to pre-COVID levels. Now, Jets also does pay out a dividend. Currently, it is a pretty weak dividend. However, it is a dividend nonetheless. And if we look at their holdings, you can see here what they hold and what percentage. So almost 11% in Southwest Airlines, 10.5% in American, 9.8% in Delta, 9.3% in United. You can Google this on your own, but you can see that the top American airlines are here, and then they also do have Air Canada sprinkled in there as well. All right, the next sector that I think is a no-brainer is the retail sector. Now, again, there is an ETF for this, and we've actually been in this stock. I sent it out in the private trading group. By the way, if you want access to the private trading group, link is in the description. But I sent this out. This is XRT, which is the retail section of the S&P 500, currently trading at around $81. This does pay a 25-cent dividend, just in case, for all you long-term holders that are curious. And if you look at their holdings, it's actually quite diversified. So they do hold GameStop, Magnite, Signet Jewelers, Rent-A-Center, The Real Deal, Designer Brands, Children's Place, Boot Barn, Kohl's, Sportsman Warehouse, etc. You can obviously Google this on your own as well, but these are just some of the holdings that they have in their fund. Obviously, we're expecting the retail sector to eventually make a big comeback, and it actually has been doing really well considering we're still in the middle of the pandemic. All right, stock number 3 is one that we've been in. This is in the travel sector, CCL or Carnival Core. This one has about 75 to 80% upside just to get back to pre-COVID levels, which is why I like it. It is one of the few travel stocks that hasn't run up hot yet. And again, these are long-term holds. You would not do this if you wanted to essentially speculate on the market within the next week or two. These are long-term holds. Expect to hold these for months to years. And I'm giving you some ideas of what I think would benefit not only in the midterm from a potential stimulus, but also like this, having a 75 to 80% upside for the long term and potentially greater if we do surpass all-time highs. All right, stock number 4 is Boeing. If you look at Boeing, they have suffered a wave of bad news. However, Boeing not only has the advantage of being a major government contractor, which is guaranteed money, but Boeing also supplies most of the planes for the US airlines as well as international airlines abroad. And currently, Boeing also has about a 70% upside to get back to pre-COVID levels. Now, because of the wave of bad news that they've had, it might take a while for Boeing to actually inch out of this hole. But we're looking for value names here, and Boeing has a lot of value. They will likely get some of that stimulus money, and they've been upgraded to a buy at some major banks like Canaccord as well as B of A. All right, stock number 5 is Square. Now, I really like Square here at the 100-day moving average, and I've been buying into Square for a very long time. But I like them. 1, they are a profitable company, and 2, they essentially have their foot on each side of the fence, meaning that not only are they an online payment processor, but they are actually a retail payment processor as well. A lot of small businesses and big businesses alike use Square for their payment processing and their pay terminals. So not only does Square benefit from a remote environment, but they also benefit from a back to work or a back to retail environment. Now, like I said, there are way more stocks than this. Like, I really like the SPY-V ETF, which is the value ETF that we've been in for months. I really like Disney on any weakness, right? The parks aren't even open yet, and Disney Plus has taken that stock to surpass all-time highs. Groupon, I want to buy on any weakness. If we do get a retracement in any of the Las Vegas hotel stocks like CZR, which is Caesars, or LVS, which is Las Vegas Sands, I will likely buy those as well. The point is here that I'm of the belief, if you have not started rotating into other stocks, which you should have, at least holding starter positions in some of these stocks, that it is now time to start thinking about rotating, especially with the stimulus coming. Now, the stock market as a whole obviously could see more of a correction, but that's not going to change my long-term game plan, as I will likely buy more on the major moving averages and major support levels. Also, it's important to note that I will likely never completely rotate out of big tech or growth stocks, right? But I'm saying that we have to have a diversified portfolio from my view and rotate into some of these names. Anyway, traders, that is it for this video. If you got anything out of this video, leave a big fat thumbs up. Leave it in the comment section below. Let me know what names you are playing for the recovery. Sign up if you want access to our private trading group. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.